You are listening to ChartingWealth.com for Wednesday, the 28th of October, 2015. We always start with the total market as represented by IYY. It's an exchange-traded fund that, as it says, it is iShares Dow Jones U.S. Total Market Index Fund. It started on a big up move back on the 5th of October. We keep watch on our large charts, which are represented by two-day candles. So each of the candles that we speak about on our large chart represent 2 days of movement. We saw the charts cross over on the moving average convergence divergence, with the blue line crossing over the red signal line. We also saw the derivative oscillator switch over about the same time. On our charts, they are light green boxes. Those watching on video, you can see them. Those listening on audio, we will explain what we're talking about. We saw the market continue to move up strongly throughout the course of October. And what do we see happening now? Well, we have a 2-day trend line that we drew connecting several different candles, at least 3 good candles from the 9th all the way up to the close of business on the 27th of October. And we have nice, good, strong up movements. The derivative oscillator lost a little bit of steam over the last 2 days, but the MACD is still widely diverged between the blue MACD line and the red signal line. We also have green open boxes for our candles. No down movement on those green candles, and a little bit of a wick on the one for the last 2 days. Now, when we revert back, we'll see something a little different on our shorter chart, because technically the total market was down 0.34%, so that's about 1/3% for the day. Topped off yesterday with a green candle and then 2 down red candles. Not a lot of movement down for the day, not enough. Well, it's just barely crossing over at the end of the day going down. Derivative oscillator lost a lot of its speed, so we do have a crossover going down on the small chart. But again, the big chart is still in an up move. So that is where we technically are. Now, let's revert back and see what happened in the SPY, which is the Standard & Poor 500 big stocks. It was down less than the total market was throughout the course of the day. It was down 0.19%, so about 1/5%. The chart looks very similar to the total market, since the S&P 500 is a lot of the volume of the total market. So they do look somewhat similar, crossed over like the total market did going up around the 5th of October. Continue to move up strongly since then. A couple of down candles on the 2 days around the 15th of October and the 21st. But the box we have over the last 2 days is above the 2-day trend line and an up move with a little bit of a wick on top. If we look at what's happening on the 2-day chart, from the 2-day to the 4-hour, we see again we had a topping off over the last day and then down movement throughout the course of Tuesday. So that is where we are with the SPY, Standard & Poor 500, and the total market. Now, when we look at the Qs, it's a little different. The Qs, of course, represents the NASDAQ 100, the technology stocks. It boomed up even bigger today over the course of Tuesday, that is the 27th, outside the Bollinger Bands, which are the volatility bands. On our charts, they are dashed blue lines above and below the price movement. And so the market really knocked it up today. It was up 0.20%. Now, again, we're looking at a 2-day candle. Strong divergence underway on the MACD and the signal line, and a large increase, well, a decent size increase in the derivative oscillator. If we go back to the 4-hour chart, see what we see. We can again, looks like the NASDAQ 100 is hitting about the same topper than it has been for the last few days. In fact, you can see some green arrow up movement, and it's not gone above the movement in the afternoon on the 23rd. That was at the end of this last week. It's not really gone above that, right at 113.17. It did throughout the course of the day. Its high was 113.11, so it's not even gone as high as the market went on Friday. So that is what we're seeing. Again, could be a topping out. We've seen the total market and the S&P 500 top out and start some down movement, but still we are in an uptrend on the total market in the large charts. The S&P 500 large chart up movement, even though there's a down movement on both those on the small charts. And we're in a up movement on both of those on the Qs. So again, watch to see if it's topping out on the Qs. Be cognizant of what's going on the S&P 500 with this down move on the short chart, not yet crossed over going down. And again, maybe just digesting some gains and getting ready to move back up, still well above the 2-day trend line, and realize that in the total market, it has crossed over going down. Doesn't mean it can't bounce back up from that. But again, pay close attention. When we start seeing the filled in red boxes, that can mean that you've got some stronger down moves, particularly one after the other. We can look back and see where those down movements have occurred in the past and where they rotate back over. So pay attention to those things, particularly when you see a crossing over on the MACD paralleling the down movement on the candles. That is where we are on our large charts. Now let's go back to and again, we're just advising caution in your virtual trades on those indexes. And when we look at gold, what is gold doing? Well, gold on the big chart is in an up move, although we've seen some down movement over the last 4 days. Gold actually for the day was up 0.22%. It shows a small green candle on an up move on the 2-day chart. But what do we trade when we look at gold? We look at the 4-hour chart. And what do we see there? Well, gold crossed over on that chart going down on the 19th. And it has continued to steadily move down, although it looked like it could, right toward the end of the week, be reaching sort of a plateau, a bottom as it were. A little bit of up movement in the morning on the 26th, and then in the afternoon on the 27th. It was technically for the day up 0.1%, 0.22%, and again that's 0.22%, so 1/5%. Not a great deal of up movement, but some, although it's still not crossed over. Derivative oscillator is losing some of its downward momentum, and it does appear that the signal line and the MACD are getting closer together, potentially converging for a crossover, which would mean an up move, but we don't have that just yet. So continue to pay attention. We saw some up moves occur back on the 20th of October, and there was a bit of a digesting of some down moves and then continued downward movement. So just watch the charts, pay attention. When you start seeing 2 or 3 green up movements, then particularly filled in green boxes, 2 or 3 of those in a row, and we start seeing a real close quickening of the MACD and the signal line, that may very well let you know that there's a transition and an up move is on the way. So that is where we are in the markets today. Caution on our big indexes, IYY, SPY, and the Qs, with potential topping out on those short charts, but still confirmed up moves on the big charts. And gold, keep an eye out for that to see if it's going to turn around and start moving up. That is where we are. Thank you so much for listening to us. We love to hear from you. You got questions, concerns, observations, please let us hear from you. cw@chartingwealth.com is the email address. We are happy to hear from you anytime. We love to hear what you have to say, what your concerns are. If you want our free layout from stock charts, freestockcharts.com, we'll be happy to send you our layout, the one that we actually use at Charting Wealth, and we'll also be happy to send you our 15-minute how to read a stock chart video. Great, helpful. We love to hear from you. Let us hear from you. Follow us on Facebook and Twitter and Instagram. God bless. Wish you the best in your investing.